Welcome back, everyone, and thank you for joining the channel today. We're going to take a deep dive into UIPath and examine exactly how this stock is performing at the moment. Since its initial public offering back in 2021, UIPath has experienced a massive sell-off that has left it trading far below its earlier highs. And the price has now entered a region where it appears to be consolidating after a prolonged period of downward movement. To get a clearer picture of this action, let's draw a parallel channel at the bottom and evaluate what the stock's price action is telling us. By extending this channel up to the recent highs, we can identify the range within which the stock has been moving for quite some time. Now, it is important to note that while it is theoretically possible for UIPath to fall below the $9 level, historically this has been a strong area of support, and it is reasonable to consider it as such when analyzing potential downside risk. The content in this video is for educational and informational purposes only, and should not be considered financial, investment, or trading advice. Investing in stocks, including UIPath, carries risk, and past performance is not indicative of future results. Always do your own research, DYOR, and consult with a licensed financial advisor before making any investment or trading decisions. The creator of this video is not responsible for any gains, losses, or decisions made based on the information provided. Another key observation on this chart is that there appears to be a double bottom forming around the 950 mark. While this does not guarantee that the stock won't dip below that level and retest the bottom of the parallel channel, typically in such patterns, the price moves from the bottom to the top of the channel and then often retraces back down before possibly climbing again. The presence of a double bottom can be seen as a potentially bullish signal, indicating that the next significant move might not necessarily be downward, but could in fact be toward the upside. However, we also need to account for the prevailing trend, which is currently bearish. After a short period of positive movement, the stock has flipped back into a bearish trend, which raises some concerns. Historically, every attempt to enter a bullish phase after the massive sell-off has been relatively short-lived, and the stock quickly returned to its downward trajectory. There are several reasons why this might be happening. Perhaps the stock was overvalued at its IPO, which left it more vulnerable to price corrections, or maybe it is more sensitive to broader market downturns or potential collapses in the AI trade compared to other companies, resulting in stronger downward pressure. The mixed signals we are seeing suggest that there may be further consolidation within the current trading range. The stock could experience additional downside, potentially declining by as much as 20% to retest previous support levels or even slightly below that before any significant upward movement occurs. The bearish regime may continue for a while longer, and only after this period of price stabilization could we possibly see a more meaningful recovery that might take the stock back toward the top of its parallel channel. It is also worth considering an alternative way to draw the parallel channel, acknowledging that some of the recent upward moves were parabolic in nature. This perspective suggests that the stock's previous rapid rise may not necessarily repeat itself, and the top of this channel may have already been reached. Adopting this viewpoint would support a more bearish outlook, implying that the stock could decline back toward the bottom of the parallel channel, around the $9 mark. Regardless, the overall signals remain mixed, and caution is warranted when considering any investment in UIPath at this time. When we examine UIPath relative to the S&P 500, the comparison is not particularly flattering. The stock has consistently underperformed over a long period, which is generally a warning sign for long-term investors. A persistent underperformance on a relative valuation basis often indicates a stock that may continue to lag the broader market. For UIPath, this is compounded by its lower market capitalization, which, while potentially offering substantial upside in the event of a strong rebound, also makes it inherently riskier. If the stock does manage to recover and reach the upper levels of its channel, gains could be significant, potentially offering a 100% return from current levels. However, this scenario is far from guaranteed, and investors should be aware of the considerable risk involved, especially given that the previous peak occurred back in 2024, which reinforces the uncertainty surrounding its near-term trajectory. The current landscape for UiPath is therefore defined by caution and mixed signals. On one hand, there is the potential for bullish movement, particularly if the stock maintains support levels and begins to climb back toward the top of the parallel channel. On the other hand, the prevailing bearish trend, historical underperformance relative to the S&P 500, and susceptibility to market pressures suggest that additional downside cannot be ruled out. Investors should carefully weigh these factors before making any decisions, recognizing both the potential for significant gains and the inherent risks of further declines. The stock could consolidate further within its current range, experience modest declines before any rebound, or potentially surprise with a stronger upward movement, but predicting the exact path remains challenging. Ultimately, for those tracking UiPath, this stock presents a combination of opportunity and risk. The possibility of a rebound from current levels or a double bottom formation could attract bullish investors looking for upside potential. Yet the consistent bearish trend and historical underperformance suggest that patience and caution are required, particularly for investors with lower risk tolerance. Even with the chance of substantial upside in the event of a successful recovery, there is no guarantee, and every move should be carefully monitored in the context of broader market dynamics and the stock's historical behavior. In conclusion, UiPath offers an intriguing but complex investment scenario. While there are signs of potential bullish opportunities, the stock remains in a bearish trend, has a history of underperformance, and continues to carry substantial risks. Investors need to stay alert to both the potential for consolidation and the possible formation of bullish patterns, such as the double bottom around $9.50, while also keeping in mind that further declines toward $9 or below are possible. The stock's low market capitalization presents the potential for large price movements in either direction, making it suitable for risk-tolerant traders but less ideal for conservative investors. Keeping a close eye on the trend, the parallel channel, and the relative performance versus major indices is essential for anyone considering exposure to this stock. Thank you so much for watching today's in-depth analysis of UiPath. I hope this video provides valuable insights for your investment decisions. Be sure to like this video and subscribe to the channel for more daily updates and detailed market breakdowns. Stay tuned, stay informed, and I'll see you in the next video.